Well, yes, Reliance Jio is one step closer to its IPO. The IPO is likely to hit Dalal Street in the middle of this calendar year. And ahead of that, Reliance Jio stocks has declined nearly 13% on a year-to-date basis. So what explains this and what's the outlook going forward? We are here to decode that. First up, let's talk about the changes in the norms which have been done by SEBI, the news which came overnight, where minimum public holding which was earlier 5%, has now been reduced to 2.5%. Reliance Jio wants to keep Jio's free float to 2.5%, and government has now notified the amendment to SCRA, which is the Regulation Act. Earlier, minimum public offer requirement was 5%, which has now been lowered to 2.5%, which means Reliance Jio's IPO is all set to hit Dalal Street in the middle of this year. Of course, there's an implication over here. Reliance Jio will have to go ahead and raise at least 15% in the next 5 years and 25% in the next 10 years if shareholding is below 15% during listing. But let's try to analyze what this means for Reliance Jio's stock price going ahead and Reliance's stock price going ahead. Now, there are two schools of thoughts over here. One, that there could be value erosion because of holding company discount. Potential IPO by mid-2026 could be a worry for Reliance Industries because Reliance Industries holds 67% stake in Reliance Jio. And on account of holding company discount, the stock price could fall ahead of its IPO. But there's a second factor which continues to remain at play. Reports suggest, and most likely, Reliance Jio's starting free float could be just as low as 2.5%. Lower free float might create liquidity constraints, because of which the stock could trade at a premium as compared to its peers, and some brokerage houses like CLSA believe that the premium valuation as a result of liquidity constraint, which is caused by lower free float, could completely negate the impact of holding company discount. So those are two schools of thoughts regarding how Reliance's stock price could move ahead of its IPO, which is scheduled in the middle of this calendar year. Let's also talk about a couple of other factors which continue to remain at play for Reliance Industries. One, as a result of the West Asia conflict, there are two positives: likely rise in its petchem margins, and second, this is also likely to aid from jump in diesel cracks, which has now risen to $35 to $42 a barrel. These are the two positives that the company is currently enjoying as a result of the West Asia conflict. Remember, FII holdings in Reliance Industries have dropped from 28.3% in March 2021 to just over 21% in December 2025. Clearly, FII holdings in Reliance Industries has fallen over the last 5 years. But on the valuation front, Reliance Industries still looks attractive because it is reasonably priced as compared to its 3-year average. Price to earnings multiple currently is at about 17 times versus 24 times, which is its 3-year average. And even on EV to EBITDA metric, the stock looks reasonably priced. Let's also address some concerns around debt, which is actually not a concern for Reliance Industries. Net debt to EBITDA currently stands at 0.6 times. The management has clearly stated that net debt to EBITDA will remain below 1 times despite CAPEX. CAPEX, remember, is likely to moderate going forward, and it will be fully funded via internal accruals. So those are some factors which continue to remain at play for Reliance Industries. Let's also talk about a couple of other tailwinds. Street is bullish on their AI foray. It is bullish on data center business, ramp up of new energy, the 75,000 crore investment that they announced 2 years back, quick commerce business, and the outlook on that business also continues to remain very positive. So clearly, quick commerce ramp up, meanwhile, is likely to weigh heavy on retail businesses' EBITDA, and this could be a headwind for the stock in the near term. But for now, the path for Reliance Jio's IPO has been cleared, and the stock has corrected 13% on the back of valuation and holding company discount, but that could perhaps not play out because of the low free float that Reliance Jio is looking to come out with.